Segment today is on backtesting. So again, I'm so excited. Why? Because as swing traders, the only thing we can know for certain is putting all the odds in our side to have success. And so what I mean by that is, as swing traders, if we have a method and have a strategy and have a system to profit that has been back tested and has been proven, then we can consistently make money and we don't have to worry, we don't have to stress and all that stuff because we know what's happening. And so in this segment, I want to do a quick back test over things. And again, if you have any back testing ideas like, Austin, I had this idea or strategy or whatever, there should be a link in the description below and you can submit any trade ideas you want to submit, any stocks you want reviewed, and we can do that on the live stream. But in today's training video, we're going over backtesting. And so let's go over what backtesting is. So anyways, the goal of backtesting is to help us find a profitable strategy that is proven to work with a step-by-step checklist. And so again, the idea for today's backtesting idea is, the big picture idea is buying stocks that are trending up, aka making higher highs and higher lows, actually profitable. So can we actually make money by buying trending stocks? And so again, that's the idea. Now, how are we going to test it? And so again, the idea behind testing it is, let's take a look at an example, right? This is the S&P 500, which we've been dissecting all morning on the live stream. But basically, there's different phases of the market, right? The market is kind of range bound, then it kind of dips down, then it pulls up, then it dips down. So the overall market is full of different phases. And so again, with these phases, most of the money is made when it's trending up, right? Like, we want to buy an asset that's increasing in value. If the asset's not increasing in value, what's the point of buying that asset? And so again, we have this trending aspect trending up. And so again, where are we going to put where are our buy and sell signals? So our buy and sell signals, again, if we're making money to the downside, we're shorting, right? We want to short when the lows are getting lower and the highs are getting lower as well. So that would be underneath this band and selling around there. And then our take profit would be when the highs are getting higher and the lows are also getting higher. So that would be, buying above the green band and selling when it breaks back below. So those kind of are like our buying and selling criteria. So the setup for this is, a buy signal for this back testing will be when it breaks above the green line, and then it closes when it breaks back below. So again, these are all moving average type setups. Then we have a short signal is below the red line and a close signal is above the red line. So again, if we kind of look into that a bit further, here are our statistics for the S&P 500. If we follow this setup, pulling from the last 14 years. So these are 14 years of statistics. The time period for this backtest was February 2008 to now. Again, the total trades was 63 trades, with 35 being successful. That gave us an accuracy rating of 55.6%. So again, 55% of the swing trades made money. And this, including our losers and our winners, we had an average return over those 14 years of 121% return, with our risk to reward being 1 to 5 on every single trade. So that is obviously pretty good, right? A 121% return over the last 14 years. That actually comes out to about market average. So again, you get to stay out of crashes, and you're generating about an average market return. So not too bad. What does this type of setup look like for the QQQ? So again, this is a 15-year study. So this is from October 2007 to now. So again, ironically, we have 63% or 63 as the total number of trades. Now, again, this is actually understandable because QQQ and S&P 500, although they have different holdings, they operate quite the same. And so since they move about the same, we have about the same number of trades, since the trigger for these trades are about the same. So again, that is a 52.4% accuracy rating. Total return, though, is still higher than the S&P 500, about a 158.7% return, including all losses and winners put together, which gives us with the losses and winners, we have about a 1 to 5 risk to reward as well. So again, QQQ obviously works better and has the higher return than the S&P 500, but that makes sense, right? It moves a bit faster. If we're looking at all stocks in general, so again, this is a more of a recent study with looking at a ton of stocks. So again, studied over 1,800 stocks, 1,809 stocks. And from there, the time period from January 2021 to now, there were 7,228 trades, 3,370 of which were profitable. that gives us about a 46.6% accuracy rating and a total return of 217%, basically over the last year and a half. So again, a 217% return is amazing. And I would say with a 1 to 8 risk to reward shows that this can have a lot of potential. So again, trend trading stocks may have some great potential. Now again, there is one thing I want to lay out, and that is this. Okay, when you're looking at risk to reward and understanding back tests, you need to understand, does the strategy actually work? And what I mean by that is, what is our risk to reward and what is our win rate? So again, our risk to reward shows how much money we stand to risk versus how much we stand to make. So for instance, if you have your stop loss set at 3%, and your reward set at 9% for easy math, you do 9 divided by 3, and that is 1/3. So that becomes your risk to reward of 1 to 3. So 1 to 3 risk to reward. And so when we look at this, if we want to break even, which means make no money, what is the success rate we need to have? And so a success rate for a 1 to 3 risk to reward is a 25% success rate. So that means that if we want to stay even, then we need to win at least 25% of the time. Or a quarter of the time. And so again, if we want to make money, we just have to be more accurate than 25%. And so why did I bring this up? Well, because if we're having, at least on the QQQ, a 1 to 5 risk to reward with a 52% success rate, does that work out long term? Well, obviously the average return is positive, so it must. But we can also look here. A 1 to 5 risk to reward means that we have to be right 70% of the time. But we're right 50-something% of the time. So that means that's way over 17%. Thus, that's why we have the profitable result over time. And so again, that the plus 158% return is because all those math numbers are working out in your favor. So again, the game plan for this, since it works, is again, you want to buy a stock when it starts trending up. You want to sell the stock when it stops trending up. You want to short a stock when it starts trending down, and you want to close that short when it starts trending up. So how do I identify trends? I'll cover that here in a second, but basically it just means when the highs are getting higher and the lows are getting higher as well, that identifies an uptrend. When the highs are getting lower and the lows are getting lower, that is a downtrend. Buying and selling within those ranges tends to be profitable. So anyways, that kind of discusses what we learned. Trend following statistically works based on tracking the overall market, the S&P 500. Trend following even works on most stocks, especially during the tense market. The recent study between 2021 to now, or about 2022, halfway through the year, yielded a profitable result. And again, this strategy can be followed and should have long-term success results if followed correctly. So that is kind of what we did in the educational segment, is learning how to backtest. So again, if you want to learn more about backtesting and using the specific indicator that I covered in this video, then again, you can get your 14-day free trial to the Impeccable Stock software to use that indicator, linked below in the description. But anyways, that kind of covers our educational segment.